Today I want to share a high probability trading idea in cotton with you. I will pull the trigger for a short as soon we trading into this 2-week supply zone here, where price has historically reacted with strong bearish momentum. And as you can see, the market structure is already aligned with a clear downtrend, so we are essentially trading with the dominant flow. Now let's add confluence. The CUT data is showing an extreme positioning imbalance. Commercials are heavily bearish, the smart money, and retail traders are heavily bullish. You know, the ones who are always, most of the time, not always, most of the time wrong. And if we look back in history, last time we have seen this kind of extreme positioning, the outcome has been a strong downside movement. Retail is usually late to the party, while smart money uses this liquidity to offload positions. The next confluence is seasonality. Seasonality, as you can see here, is also showing a bearish movement ahead, with a 70% probability for the market to go down, looking back the last 26 years. And when it comes to seasonality, I normally want to see at least a probability of 80%, but in this case I am willing to still take the trade because CUT overrules seasonality for me in this case. And just so you know, this pattern, this bearish pattern, is valid from yesterday, the 12th of May, until the 6th of June. So we could drop anytime from now. Now, the last confluence, let's bring in valuation. When price enters the supply zone and valuation is overvalued against the US dollar, I will short cotton. But let's be very clear here. Yes, this is a high probability setup, but not a guaranteed winning trade. There is no such thing as a 100% win rate in trading. Even the best setups can fail, and risk management is what separates traders from gamblers. And this is why discipline, risk management, sticking to your rules is everything. On the execution side, this trade can be taken both on prop firm capital like FTMO, for example. They offer also cotton. As well as on personal capital through brokers like IC Markets, and I personally use both approaches. So to wrap it up, we have the market structure aligned with us. We have positioning extremes, CUT report, commercials, smart money against retail traders. We have the seasonality in our favor. And now we are just waiting for valuation to be extremely overvalued, hitting the supply zone, and then we can pull the trigger. In the end of the day, how you time the trade is up to you. I will use this technical supply zone on the weekly time frame to time the trade. But if you want to use something else, it's up to you. Everything is pointing in the same direction. Can this trade still lose even everything is showing that it will go down? Yes. Is it possible that this trade will never reach the supply zone I marked here and we will miss the trade? Yes. Is it possible that we will make money with this trade? Yes. It's just all about probability, guys. One of the most important things for me is not having FOMO. I left this fear of missing out behind me long time ago, and if you still struggle with it, you must get rid of it. To be profitable long term, you have to literally kill this emotion. Of course, same for fear and greed in general. Kill these emotions. This is what you have to do as a trader. If this trade will hit a stop loss, I will say I would still take the setup again and again. I personally don't give a what the outcome is of this trade. I am just following my rules and execute on them, based on them. That's it. Guys, thank you for watching. Let me know if you will take this trade. Only take this trade if it makes sense to you. Let's potentially print money together. Happy and safe trading.